Stock market, I'm going to give you the SPY intermediate projections and a cycle analysis lesson. Some important information about our analysis right here. It might help you if you stop this video and just read this or take a little picture of it, but you'll get an idea of the analysis that we do and how it differs from other sites that are out there. All right, stock market, intermediate projections 1 to 3 months with a cycle analysis lesson. So you know that we have been looking for the stock market to go into a correction, which it pretty obviously has. We talked about the SPY moving down from its peak between 30 and 60 points. I think from its peak right now, it's made something like 25 points to the downside, close to that. So it is very much in line with the expectations. Now, we don't exactly have a projection that says it'll go down to a specific number because we look at price and time. And as magnitude builds to the downside in a window of opportunity for sellers, then it can go down very sharply. And I'm going to show you how I build that analysis and what the projections are. So this is really a cycle analysis lesson, a little primer for you, for those people that, we get a lot of emails and comments on social media that says, wow, you really nailed these projections. I wanted you to get an idea of my thought process of how I go through this and how I came to this market that I felt would be declining right in this time frame. So this is the SPY looking at this. Now I'm going to go through several different versions of drawings and annotations on here so you get an idea. So right now what you see on here is just the pandemic bottom here in March 20 and the bull market peak up here in January 22. And what we have on here is the 1334 SMA, simple moving averages, which I like to use on my weekly charts. I think that they're better than anything else you can use. And you also have this line right over here, which is our proprietary momentum indicator, which we use on different charts. I like to use it on the weekly chart because it tends to help guide the cycle analysis rhythms. And I'm going to speak about rhythms and energetic movement as we move through this. So this is your basic candlestick chart with a couple of moving averages on there and our proprietary indicator. And now what I'm going to do is I'm going to go from here and begin to move through the analysis. So right now what I've added on the bottom are called cycle brackets. You can see in here I put these arrows in, and what I'm looking for is a repeating energetic rhythm. Now as the market moves up, as you see in here, it tends to ride the moving averages. As you see, this is the 13-week moving average. And then when it breaks down underneath it, it tends to be some signal that there's some important rhythm going on. And my eye identifies a rhythm in here that's being driven to the upside by the upward momentum, as you can see. So there's what I think is an important little low here and an important little low here and one over here. And then one over here, but you could see the market is kind of changing there. And then one over here. So I put the cycle brackets in here in order to give me some sense. Now I noticed that this cycle right over here really looks to be divided in half, as you can see. And this one over here looks to be kind of divided in half. Here, this one over here, from this low here to here, looks to be, it's a little hard to see that half. And this one has a very clear half that you can see right there. And here's that little minor cycle there and the half right there. So I'm identifying what I see as energetics in the market rhythms. Now, the important thing as we see this is that the formation of the actual price action gives us important information. So this dominant cycle right over here, as you could see, is a 26 weeks, and the minor cycle, which divides it in half, we'll call it the half minor cycle, is about 13 weeks. So I can see that in here as I look at it. Now I have a very trained eye, and I know what these things mean, but I want to explain that to you as we move forward because I think it's important to this analysis. So this you can see is I added the ideal cycle brackets, these energetics in there of money flow, and these give me the cycle phases. When I say phases, you might say that it's when you look at the how other chartists look at it, that it's the rising phase and distribution and declining and accumulation, those type of things. We identify them as rising phases and peaking phases and declining phases and bottoming phases. And you can see right over here on the minor cycle, rising phase, right over here, a peaking phase, a declining phase, and the reversal scout helped us there, and the bottoming phase and the reversal scout helped us right there. As you can see, all important information. So now let's switch over to the next chart right over here as I move through my analysis. And what I've done now is showed you how the price action actually is showing you the movement in here on these cycles. And to give you the clarity, this is the ideal. Now remember, the ideal cycle would rally about halfway up and then come down about halfway right over there. That's the ideal. But you can see it's forming in a different way, where it's rising through most of the cycle and declining through a small portion, rising and declining, rising and declining, rising, and all of a sudden this started to take a shape like this cycle right over here, more like the ideal. But notice that where this bottom is right over here is lower. That is important. Notice that this bottom over here is lower. That's important. So this is important messaging. So we added in the actual dominant cycle that you see in there, and that gives me more information about market condition. Now you see this dotted line over here. This really isn't projecting anything yet, because all it is showing that it has rolled over in here, and the momentum condition there has not yet really rolled over. So we don't really have a solid signal yet about the market peak using the our proprietary momentum indicator. Now there are shorter term indicators that have given negative signals, which I'm not going to show you now because I'm really looking at this weekly analysis. So let's go to the next one, and now I'm adding in the minor cycles, as you can see, and showing you how the minor cycle was positive here, higher bottom right there, a higher bottom here. That made up the two pieces here, and you can see each of these cycles the same thing. This is an upward trend, as you can see, as each of these minor cycles was higher bottoms and higher peaks. Higher bottom and higher peak, but look, something changed right over here, and that gave us some information. Not only did the reversal scout turn down at an earlier point of the cycle right there, but it then told us some information that the decline was likely to go all the way out towards the bottom of the cycle. You can see these blue vertical lines in here. We've added in those cycle lines so you could see where the actual lows came. The actual lows don't always come right on the ideal lows, as you can see. So the troughs, when they form, the bottoms of each of these cycles occur somewhat in some variance of where the ideal would be, but still we get a ton of information in there. So we've added in these cycle lines and these minor cycles, and you can get a good idea of the picture in there. And here you could see this minor cycle in here was positively formed, as you could see that, and that gave us the expectation that the market peak had not occurred, and then it would likely be rallying up here again and taking out that high, and it actually did so. So that was kind of why we didn't think the market peak had occurred yet when the market turned down right over here in December and then began to move up again right over there. So now let's look at the next one, and now you can see I'm putting in some other information. These are cycle configurations and translations. So a cycle configuration is positive when it says a higher bottoms. You can see, and the translation is positive when it peaks late in the cycle. You can see the late peak in the cycle here, the late peak here, the late peak here, and now it's beginning here to give you some different information. It peaked in the middle of the cycle, and these translations and configurations then turn negative. It told us that this rally would fail. It actually made a head and shoulders top, and you can see how the cycles actually create the head and shoulders top. Look what happened here. It got underneath these lows right over there, and it told us there's a lot of trouble. and that this cycle that shows us a cycle length or period from here to here was likely to continue to move to the downside. And with this short-term cycle, the half minor cycle made a negative configuration. It told us the likelihood would be that this would decline. Again, you can see the evening star that formed right in here, an evening star that formed right in here, a bearish engulfing right in here. So we use candlesticks also to help us there. Now what we see in here is that this cycle configuration is looking like it's going to be positive. Now, it also is telling us, as you could see the translation, look where the peak is, way on the right side over here. So there's not a lot of time for decline. So I'm telling you how my mind is working here, what I'm seeing. If you remember so many times, and I've been criticized for this, Slim, you changed your analysis. Well, I don't change my analysis. We look at the market. We're agnostic. And the markets tell us what the analysis is. This low right over here, which occurred at around 348, well, you could see there's not a lot of time to get down to that low. And when I see these configurations right in here, it says to me that this market decline, which is in a very risky period, and I'll say more about that, may not be able to make it down here because it's going to take a lot of time. Now, you can see the very end of these cycles have a lot of downside, strong capitulation that occur. As you can see here, when you have a negative configuration, and right in here, it sold pretty hard right over there that you can see where it fell some almost 50 points right in here, 40 something points very quickly right here. And these last few weeks where the SPY fell from about 412 way down to about 350, which was about 62 points. So there's time for a hard decline in here, and we can't take 348 off the table, but I want to take this analysis a little further so that you could see what the projections look like in here. So I'm going to go to the next set of annotations right over here, and now what I'm bringing in is this periods of risk, the Fed actions, what you can see, what influenced the market movement. Of course, right in here, after the pandemic low, the Fed and the government brought in extreme stimulus. Extreme valuations. S&P 500 went up to about 200% of GDP right up over here, where past peaks have been 110, 150% of GDP, and that really had a sense that there was going to be a reset coming. And here's where the Fed began to withdraw its stimulus, and the S&P 500 reset of valuations has begun based on this period. These nested troughs, in other words, where the minor and the dominant cycles come down, that's these yellow zones. You may see us put them up on the chart sometimes, and those are periods of risk when those come in there. Now, it is minimal when the momentum and the translation is strong. So in other words, momentum and translation strong, you have minimal declines, and then you get to new highs, as you can see right in here. When the momentum and translations is risk, this should be severe, not several. Then it is severe to the downside, as you see right over here. Negative momentum, negative translation, negative momentum, negative translation. And that gives you a sense that there are hard declines in these periods of risk. And that is why I have talked about this period right here, the period of risk that the market has just moved into. I talked about it starting sometime in late January. That's when these peaks were coming in right around late January. It is now weakening right in here, and we are in this period of risk right now. Now, I don't know how far down this is going to get. So what I have to do is put in the important information regarding the support resistance levels. And now I've put that in here so you can get some sense of where we are. You can see in here that it rallied into the sell zone and collapsed, rallied into the sell zone and collapsed. Here you were getting bullish configurations right there. It hit the minor support zone and rallied. Here are your minor support zones and dominant support zones right in here. And you can see in here on configuration, I don't know how this is going to turn out. If it turns out a positive configuration, this is the bear market bottom. And you will begin this movement up here. And our target was around 430 in the S&P 500, in the SPY. Or it could break down below this 348 level, this major low, and that would be an indication that we have to reevaluate where the upside projections are. Let me just get this in shape for you to see right over here. So you can see what we're looking at right over here are the projections that we've now put in here. Here's your period of risk. Here's your positive period when you get out of here. This is a very important period, and again, a period for potential downside capitulation. It has entered the minor support zone right over here. It may find a little bit of support here. The shorter term patterns are suggesting the market will continue down maybe for a few more days and then try to rally. And then the real strong period of risk is in here. It could stop here at the dominant 38.2 around 391.60. That's possible. It's not likely. You can see this black projection right over here that takes you down to the dominant 50, about 383. That would be, to me, what is the highest probability occurrence. And then if it does capitulate and the bear market continues, then some of these lower projections, 375, 363, and potentially testing the 348, is still possible. You can see I don't have a projection down to 348 because I would call that a very low probability. Therefore, and even looking at the Dow structure and patterns, that is really looking much stronger than the SPY and telling me that it's very likely that this was an important bear market low over here. But the possibility is still there, though a low possibility, to get down to 348. We are in the period of risk. Let's just have a target here of about 383. That's only about 12 points below the present level, and so that's not very far. 383 to 375 is probably more realistic here in this next month. And